Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 27th of January. So I've seen some big moves this week on the key indices and some of the currency pairs, so we'll jump straight in and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and you can see that we've hit that target that effectively has been, I guess, haunting this pair. The 71 cent is a very, very important level, obviously, but every one of these 100 pips or 1 cent levels are going to be very important on the way up, just like they were on the way down. And quite often, you're going to see that the evenly spaced support and resistance zones are very, very respected on the way up and on the way down. And as you can see here, these have been basically holding up all the way through. Now, we've got obviously a very strong series of higher highs and higher lows, and there's no question that the strength is here in the Aussie USD. But you can see that we've had a couple of days of trading now at around the 71, just above the 71 cent mark, and all the levels are very, very important. So yeah, quite often when you see this level being respected, a possible move down to the 70 cent mark is definitely on the card. There's no question that this could happen, but in reality, you want to be waiting for the market to actually do that. So if you go to a smaller time frame, say for instance, we go to a 1 hour chart and we see a series of lower highs and lower lows, this is going to be a target for the scalp. Okay, so you're going to be scalping down to the 70 cent mark, very obvious level to go for. But if the market continues to move up and the momentum increases and we see a series of higher highs and higher lows to the upside, then it's also a very easy trade. You're effectively trading up to the 71, the 72.50 mark here really is where I've got this one, but 72 cents is probably where you'd be really looking for the potential first exit. So really good trading and really solid, but it's been very, very strong and it's not showing any signs of weakening momentum. But just be mindful, the 71 cent mark is very strong resistance. So if you are going to trade it longer from this point onwards, you want to be waiting for the break of this level and a smaller time frame series of higher highs and higher lows, the lightning bolt, or the reversal on the smaller time frames as well to get it back down to that sort of 70 cent mark. But good trading on the Aussie. All right, we'll move over to the US dollar CAD now. And the weakness is really continuing. Look, it tested the 20 moving average. No real surprise there that it's actually been weak ever since. Now it's really trying to get down. It's really effectively trying to break this level. If we close below the 133, yeah, the 132 sort of 30 area is the likely target. Very strong roll reversal zone. You can see the support that was here, the resistance that was right through there. So we've also got a 200 moving average on the daily chart bearing down on this level as well. So yeah, that being the case, if we do see the continued weakness, the expected level of next real support is going to be around that 132 area. So it's a very important zone for it. And with the weakening candle that we saw in yesterday's trade, closing just below these levels, I would be expecting that more than likely the move will continue on to get down to this. Now, if you're not already in it, if you're in it, it's no problem. Obviously, you're going to stay in the short. But if you want to go and actually enter this trade, you really want to be waiting for a pullback of some reasonable significance. Again, go to the smaller time frame, go to a 1 hour chart or even a 15-minute chart, wait for a pullback to a 20 moving average, and then trade it down to that level. So, obviously, we can see if we break it down, we know where the level is. It's not that hard. Still scalping until it gets below that level. We're not going to be really looking for anything too ambitious like a big long term trade or anything like that. We're going to be scalping or swinging in between these two zones, but it finds itself on the weaker side of where, look, it had this test here, then it went bounce back up, and now it's testing it properly, which is what you want to see. You want to see a series of candles actually get to that level. But good trading on the CAD, I think, is on its way, really. You're going to be looking at potential at that 132 to reload from that point. I wouldn't expect that we're going to sell right past there without even a bit of a bounce back. So when it gets there, I think we can look for potential trades up, but a series of higher highs and higher lows will take care of that for us. And then we trade it back to the mid zone or even up to the 135s. But really, we'll let the market dictate that. If we see a series of strength from here and it doesn't go lower and we get a break above the 20 moving average on the daily, then you can start targeting the 135.20 to 135.50 area for a move up. But yeah, that's not like the likely trade because the momentum is just not there. So realistically, it's got a fair bit of work to do to get it and close above the 20 moving average anyway. But if it doesn't, we've got to trade both ways, and both of them I wouldn't be fearing. So yeah, pretty good trading there. All right, over to the US dollar yen now. And we can see that we've got a downtrend channel. There's a descending channel here. There's no question about that. Downtrend's well and truly in place. 20 moving averages hanging around there, effectively replicating the line and the top of the descending channel, and realistically providing that bit more resistance there. So while this is holding, there's no reason to believe that it's going to go long anytime soon. And for it to go long, it's very, very simple. All it needs to do is effectively close above the 131.50. That breaks the channel. It breaks the 20 moving average. And then you can start targeting the next level that it previously broke. The 50 moving average probably will cause it a little bit of grief. I could definitely see that happening. But realistically, a break of this level here is what you're looking for it to go long. But the preferred trade is still, obviously, the downtrend is very, very strong. Momentum is still very strong with it. Series of lower highs and lower lows, all very even. And as you can see, I mean, that was even, yeah, that was basically a double top in the direction of the prevailing trend. It's classic trading 101. Fulfilled its potential straight down to the channel and up and testing it again. Very, very strong resistance in front of it, though. So if you are going along here, you want to be doing it with a lot of care. If you do get a break above the 31.50, though, it's a different trade altogether. Then you've got a series of higher highs and higher lows, and you've got a lightning bolt on the way up. All of a sudden it opens itself up to a move up to the 50 moving average, back up to the 134. But for now, we'll go with the momentum. Any change of trend, any lightning bolts on the smaller time frame with series of lower highs and lower lows, and we look to trade down to the 127 in the first instance, which is the role reversal zone, and failing that, if that continues to move from down there, you can effectively go to the bottom of the channel. So really there's two ways to play it, but just wait for the price action to give us the direction with the momentum on the smaller time frames. All right, over to the dollar index now, and this one, yeah, we know it's at a very strong level of support. It's been here for effectively a couple of weeks now. You can see not much has really happened, a couple of wicks up and down, but it's a very, very important zone, and the longer it stays here, the more important the zone becomes, of course. Hard to pick whether it's actually going to go up or down from this level. I mean, we're getting divergence now on the MACD. As you can see, we've got a lower peak down here, or a lower trough on this MACD with an even lower trough on price. So that's really a consequence of the market not moving. When it's moving in a very small range, obviously the moving averages are getting closer and closer together, which is, of course, is contracting the histogram. So realistically, we know it's a very strong level of support until it actually does something and either breaks it down and gets below the 150. That at that point, there's the 100.50. If it does that, then the euro is looking like it's going to go quite long. And of course, if it reverses from here, the 20 moving average will be the first target at around the 102.50. Of course, the euro is the one that we're talking about when we're looking from a trading opportunity. Same deal, of course. We've got MACD divergence, except on the upside. We are a pretty strong roll reversal on top, and very similar way that we're going to trade this. If we get a break above the 109.50 here, a daily close, then we start looking at opportunities up to the 111. Still, I think a scalping, kind of mindset, but yeah, it's definitely getting a decent range. I mean, you're talking about 150 pips, so it's really into swing territory. I mean, it's only a name anyway, really. Swing, scalp, all you're doing is really isolating where the opportunities are and looking for the logical targets above and below. So realistically, if we get a daily close above that level, we start looking for a move up to the 111. But if it starts to reverse around here and we see a lower high and lower low sequence on, say, a 1 hour or 4 hour, we can trade it down to the 108 in the first instance, and then the 20 moving average, if it hasn't caught up. But by then, potentially the 20 moving average might have caught up, and it's going to provide another level of support. I'm not interested in shorting this one properly unless it actually closes below the 20 moving average. Happy enough to scalp it for very small distances, but no reversal of trend on the prevailing trend is looking likely at the moment. So just bear that in mind, that it's still very, very strong, but it's going to take a close above 109.50 to convince me that we're going to 111. And until it does that, not interested in taking any longs, just looking at short-term scalps on that one. Okay, and the last one we'll have a look at, the 40-50 zone on the S&P has been hit and it's trying to go further. The 4100 is the one we've been talking about for a long time. That's the real level that I think is going to give it some grief. I could see it definitely moving up a little bit further if the momentum continues throughout today's trading or tonight's trading in the US. And if it does that and we're still below the 4100, I think next week it's probably going to get touched. So if the momentum continues on the smaller time frames, but yet fails to actually make a new high from here, you've got a 30 or 40 point move to get to that 41. I'd be very nervous at that level if I was holding longs. I would rather it wait to break the 4100 and test it from above. That's the preferred trade there. So realistically, let it do its thing. Let it try and get above this level. If it starts to roll over at this point though and doesn't quite reach the 4100, the 20 moving average is going to be the likely target. And by then, realistically, it's very unusual, and it's not that it's unusual, it's rare, I should say, that the three moving averages that we really talk about and love are all at the exact same point. So if it came down all of a sudden and just fell from here in the next couple of days, you're going to have the 20, the 50, and the 200 moving average all just about at the same spot, nearly a handful of points away from each other, and that's going to provide an extraordinary amount of support. Now, 39.50 would probably be that level if it did that. So there is that opportunity that if it does short down, it may just actually gravitate to that very strong zone, but it is definitely in an uptrend, and you're seeing higher highs and higher lows. So 4100 to the upside, which is a bit of a small scalp. If it breaks above the 4100, look for a pullback to it, and then a small change of trend on smaller time frame. Then off we go all the way to the next level, which is around that 43. And if we see a weakness, expect very strong support at around that 39.50, because that's where all of the moving averages are converging to. And of course, it's a roll reversal zone from a price point as well. So good trading on the S&P, but it's one of those ones where we keep our trades fairly short again. So I hope you had a great week's trading. I think we've seen some really good opportunities, and the levels are all really playing out quite nicely. So have a great weekend, and I look forward to seeing you all next week.